Hey everyone. Okay, no rate change as I pretty much expected. Like I said yesterday, I don't really see neither Canada or the States having any major changes from now until like maybe earliest June or July. So I wasn't really thinking that they would have an impact there. Can you guys see the screen? I don't know why that took forever to load. The thoughts going into this were if they hold the channel 7144, 48, 41, basically this range in here, they held mid-channel, which meant that they still left some room for downside volatility close to like the 3322 areas. But where they opened today is essentially implied volatility on both sides. So 716263, it's not a terrible place to open. However, it's not ideal. Overnight conditions were that we had to try sustaining 7166, 7172, and test 7188. You can see that they stalled exactly at 7188 last night. Kind of tried holding here. This is where I could see that there was some present volatility, specifically due to the fact that they couldn't quite sustain these ranges. They tested again, stalled, kind of brought it back. So this is basically a means to core to zone stall kind of scenario, which kind of keeps you kind of right in the middle. When looking at it from like a ratio perspective, we already looked at this, but usually when the market moves in like core ranges, they roughly move in like 25, 28, 35, or 40, 55, 55 points, okay? We did trigger, I think, 33 to 34 points from the low to real-time high, which is where they could then potentially be at risk of triggering these types of ranges, hence like the 7132. My bigger concern would be is if they actually had like full core ratios. So if you see this from here, so from highs, you see like they're still off like session open. These are still within 21 point intervals. So they're still within like those rough 22, 25, 28 points in range. They haven't really broken too much range. Okay. From a session open, session close perspective, they were holding 17 points. Okay. Initially back in here when they first held, you can kind of see that they stalled close to like 22, 23 points. Same thing like the 25 point ratio. From the actual session open, do you see how we still are within like that? I'll show you here. They're still within that range. Okay, so from session open to highs, I just need you guys to see this. It's close to like this area here, which I think is, I went over this earlier, but I'll just go over this quickly just for those that are just tuning in. Make sure you guys can hear me too and see the screen. Just confirm that so I'm not talking for nothing. So this is why there's a lot of support around these 30s and 40s, okay? You won't really see major like structure breaks until they start clearing at least the 25 to 28 point intervals off highs and off open and close. So it's not necessarily off like these like specific lows. Like yes, you could look at that, but typically off open close ratios. Okay, so this is likely why earlier they were trying to kind of sustain around the 4.7, 4.6, 4.8, but and the reason being is because that's what would then extend like a bigger core move. Okay, so this should be roughly the 50 to 52, 55 points. We have moved approximately 44 to 46 points from these lows. And like I was saying earlier, close to 22 points off open. So market is technically moving in those 22, 44, 17, 34 point intervals. Okay. And specific to what we looked at earlier, like this was off where they closed, where they stalled, where they opened for the actual session. So, but we won't see any real big breaks until we hit core ratios. Does that make sense to you guys or no? And core ratios are basically these. And that's because of where we opened today. So the means typically implies those kinds of breaks. Let me pull it up for you guys. We would be at a much bigger risk if they hit full range today. Apparently, we're supposed to have some news this afternoon, so maybe. I don't think I can share images in here, though. Can I? No, I can't. Can you guys see the center screen? We'll go over this like super quickly, okay? This is where we opened, okay? So these are likely the ranges that they're gonna start moving it in, okay? Once you start rotating 33, 44 points, which is what they're doing right now, okay? Off lows, highs, okay? As we're currently hitting within these thresholds, that's when you can start seeing real expansion breaks of like 25, 50, 75, 103, okay? Where they open today is technically a mid-core area, so in other words, these, let me just pull them up. These, okay? Once we start getting these types of ranges, then that's when you're set to kind of expand. Everyone on board? So when you're looking at this, technically speaking, you haven't broken 52, 55, 56, okay? From these areas. Off opening range, you see how like they're kind of sticking those 22 to 34, 33 point intervals. Do you see that? 44, okay? They're trying their best to keep it within those ranges. Ahead of Fed, they definitely reduced risk ahead of Fed by a lot, okay, by keeping it beneath the 52 to 56 and 58 point intervals, because if they extended, that's where we could see 71, 33, 32. Do you see what I'm saying? It's specifically off highs, off opening range, around here. Okay, we're only hitting around like the 30 point interval here, so if you start breaking 32, 33, 34, okay, that's why there's a lot of confluence in here. These would be the bigger breaks of like the 50 point ranges, close to 7120s. Hence where they opened us today is, it's a pretty big area for risk, because that's what could take us back to 7110, 7106. Do you see what I'm saying? These ranges here, okay? Midpoint range is kind of like right here. So that's why they have a slight odd of holding the channel around the 7138 to 33, okay? Because that would be right off open, because today's open is what puts us at the highest point of risk, okay? Does that make sense? Like, overnight highs don't put us at a huge risk. The 7-2 session open, it's a risk, but it's not too bad. It could still hold 7120s. It's more of this area here that puts us back at that 7106 10 retest, and these are the areas that could extend us basically back to 7088. Do you see what I'm saying? Like back to the bottom of the zone to 7098. From here, there's that confluence on the 75 point intervals to 78 or right around 7110. When you're at massive risk is when you're going to hit close to like 103, 107, 110, okay? Which would be basically going back to what? What was our big support? 70, 78, 70, 81. Do you see what I'm saying? Okay, so that's a much bigger risk off these highs and off this open. Do you see that? That would be closer to like 6.5. Okay, off of the actual session, that's what would really increase risk to those 70-50s. Some of the benefits that we have this week are, we did test 7122 or 7222 ahead of this, and we still did tag 88 last night, although we didn't clear above it. So that could give us a slight odd, okay, of like trying to first sustain this area here. Does that make sense? And avoid seeing like continued downside. I haven't looked at like full range, so I could tell that this was going to be a short right into this, but I didn't look at full range, but I would imagine that right now they're probably hitting very close to those 88 point intervals here, okay, off highs, and now you're hitting close to the 52. Do you see it? So off highs of 72, 22, 23, you're already hitting close to 88 points. You're hitting those 52 to 53 off 88. When would you be at a bigger risk? Obviously off weekly highs. Okay, so that's, do you see what I'm saying? Even weekly highs are aligned to those max ratios like down here, because they've already, when they were testing here earlier, they were basically trying their best to hold those 72, 73. Do you guys understand what I'm saying? Because the way that the market moves is it doesn't just jump right through from core to core. Like there usually is an intermediate point. That's usually 88 points, 88, 96 points, okay? Before they get those bigger structural moves. So this right now is, they're basically trying to hold those 88 to 86 point intervals, okay? If they extend, that's where you can get those 71.20s, 71.22, 23. The most confluence that has the biggest area of risk is obviously the 71.10 to 14. Okay, so first I wanted to see how they'd react around 7136, 38, this range in here. We were looking for mid-means to mid-core, which is around the 5859 pre-Fed. So that condition was met. So you can actually mark that as being met. This is what's helping reduce volatility. I didn't think that they would take down 3233 immediately, especially since they did meet the condition of retesting 5859 pre-FOMC. Okay? Typically they'll test both sides first. They don't normally just, especially if range was retraced. Another thing that they did do today is even though they couldn't clear 7476, they did tag 7574. Okay? These are all attributes that can help us mitigate risk in real time. Does that make sense? Like from that kind of aspect of things? The big thing here right now is crude clearing this 107.68, 107.76. This is a massive annual range for oil that would push it back to like 110, 113, 111, 114. Okay, maybe back to our calculated overhead highs. So just keep a very, very close eye on this. I noticed so two things I noticed here. Pre-Fed, ES tagged 58. Pre-Fed, oil held 106. Okay, so they're still very much conflicted, and that usually happens in a channel. What did I tell you guys yesterday? You're almost always trading in a channel or zone pre-Fed. Okay, so they obviously couldn't clear the zone last night, so they brought it back to the channel. I made a new template. Does anyone want that on here that's not in Discord or on Substack? Then you can just kind of follow along in there too. I made this too last night. Let me just pull this up. Okay. This is the bigger area of confluence here on a 7188 break, and I'll show you why in a second. Okay, this is the area that they can kind of nest it in. Okay, the bigger reject is failing 7188 because that takes you back to your 50s. Losing 50s would take you back to like the 4-4 area. This range in here though, it's not fully bearish until they start breaking down like 3-3-2-2. Okay, that's when you'd see like that reject back to this range in here. And I just showed you guys the exact ratios and why they would equate to 7106, 10, 70, 78, 70, 50s. This was the big part today that stalled us. Was okay, momentum starts to shift. Okay, 1715.866 is accepted, and then you see that break above 7476. So we didn't hold and build above there. Okay, that's the reason why we stalled today. Was this part right here? Okay. I can post that to Twitter too, actually, if you guys want. I don't think I posted this one to Twitter. So let me copy and post that one to Twitter, and then I'll send you guys the actual ES template. Hold on. I worked really hard yesterday. I worked for like 16 hours straight, so I have these areas very confined, okay? And I could tell just by how they were trading this into Fed and overnight and early in the week that they were going to try keeping this right in between. Which is actually good. They reduced risk by not tagging 7122 or 32 pre-FOMC. Yeah, it really is. But it took a long time to get it right. Okay. So you guys could definitely try longs off like the 71, 36, 38 area. Those were the first spots that I figured they could try holding before the 3-3 test. They usually retest first. So like I said, if you're going to hold 3-6, 3-7, I would imagine that they want to try to retest at least that 4-9, 5-2, and ideally 5-8. 5-8 breaks is what would give you the retest of this. Okay, if you can get a 5-8 break, this would give you the retest of OR, which could then set you up to retest our 7-1, 7-4, 7-6. You only progress if you can break that, okay? Something that you have to kind of keep in mind is make sure you're measuring the ratios when you're sustaining these spots here. So we already know that from here, okay, off open, these are still within 25-point intervals. So they are trying very hard to reduce risk because they're not trying to push this to a 50-point ratio. Does that make sense? Because that's what would take you down to like 71, 10, 14. Okay? Now they're hitting those mid ranges that we talked about from the means, like 37, 41 points. Okay? If they're able to get back to here, then you're hitting those 50-point offsets. Okay? Which is what gets you into like this basically. This is very hard to explain, but I'm trying my best to explain it from like a theory perspective. And then, based on that graph that we looked at, what were our next spots for overnight conditions that weren't met? 9-3, right? 9-2, not 8-8. So I know that those ratios are aligned with, let's assume that they like held that range in here. And then the 72, 73, 74 would be right back to like these areas in here. I haven't fully looked at this, but I would imagine an 88-point break is probably back to close to weekly highs. Yeah, it is. And then 107 to 108 would take us to a channel. This would be the case if they wanted to basically not give us our core targets of like 5-2, 5-8, 7-1, 7-6 today, which I think would make sense if they wanted to make it channel to channel. Does that make sense to you guys? That these ratios would kind of align, and that would be the 72-40s. If they wanted to kind of keep risk a little bit low and kind of just reset things, like basically reset this shitty close that we had yesterday, they may just kind of keep it within the channel and the lower part of the zone, okay? Which would mean what for range? What does that mean for range? What does that mean for price action, though? If they did something like that. And no change, I guess, could suffice that too. They might move this in like 10-minute intervals here too. So I'm watching the 220 to see if they can clear this 5-2. I deleted a bunch of my spots this morning, so you might have to remark them. We're also trading plug. We're thinking this can get to 360 today. Maybe 378, 385. Something I noticed too that's really interesting, guys, is that basically where you can use SPX as kind of like a cheat sheet, because where this area triggered this week are like, these are core ranges, so it makes sense because these would be the 7220s on ES. But even where they're stalling here, like the 4-4, 3-8, these lows, they could basically be your targets on ES. Does that make sense? The way that this is calculated, like the 7108, 10, okay, where they're stalling here ahead of this is the same thing as basically us stalling 5-2, 5-8. And this has been pretty helpful because these were the initial targets earlier on the downside. So that's why I'm thinking they could also reduce this a little bit based on the SPX ranges. Does that make sense? Like if they're holding these areas on SPX, then that could give some confluence here on ES. There's that 220 break. Market's moving in about 10-minute increments, guys. You can use the 10-minute chart if you want. So watch right ahead of the 230 period. The highs today were calculated odds, so there actually aren't any flips specific to this point in time, but we could potentially look at like a mid ratio here. Let's see. This is likely when they started stalling here. So mid ratios were so 383 would be like close to like 191 and a half or something right here. Okay, so these points in time were the mid ratios aligned with highs. Okay, with these points here of the 7674. So if you wanted, what we could do is maybe use like the half increment of that, since we don't really have obviously that many minutes left in the real-time session. So close to like a 95, I think. So you can see those are definitely linked with like these high ratios here. Okay, those are linked closer with like 325, 321. These would be calculated times of day. These points in time are linked to the real-time session highs and also this 5.8, 5.9 area. Oh, see, that makes sense because some of those overnight highs were like 95, 96 minutes. Those overnight highs are likely on like a 97 or 96 minute chart from looking at that. So that would make sense that there would be some odds here. Okay, like close to 301. Just want to double check something. And look at this. This 162, guys, is linked to overnight highs, and it's hitting its third bar. So this is kind of interesting. So based on those calculated times, close to 321, 325, and then that 301, 3, so these are calculated times. 301 and 336 are flips, and fourth bar exhaustion periods. That tells me that if they hold these ranges here over this next half hour or so, they could break in the last hour of the day. Okay, so if they wanted to exhaust this, an exhaustion period would look something like this on a fourth bar. Okay, like bringing it back up to this range in here. Or trying to engulf, I guess, before this third bar ends, which, what's the median between 1254 and 336? Because that's what we could look for. 215 was also a point in time that we had to watch for today. 215, is that? That's the fourth bar. Maybe that's the midpoint. These periods are coming up right here too. That's when they brought it back over 4-4. What did I say? 1254. And why didn't it mark that? That's weird. It marked 326 instead of, do you guys see that? Why did it mark 320s? Oh no, that was me marking that from the calculated time. Okay. That period of time seems important for when they were crossing 5-2. So that makes sense, because that's the area that they're struggling with here. So I would imagine that the midpoint in time between there is likely the period that they need to absolutely break that 5-2, 5-3 wall, okay? So we could look at like 81.5 minutes. These are probably the points that they tried clearing. Like right in here. They did try. That's probably a cutoff. Which makes sense because they are moving in roughly 10-20 minute intervals, so 40-minute interval and 80 would make sense. These are really interesting though. So a lot of these are like super late. Crude is breaking that 107.07, 106.96 ahead of this 230 period. That's something that you should definitely know. Like I said, monitor the same exact points in time for oil. So we're watching 229, 230 on ES. So we of course have to pay high attention to crude here just in case. I did mention this morning that I think the volatility and divergence between the two has changed a little bit, where it doesn't have as much pressure, I guess, on the index if oil starts reversing back up, and it could be because it's trying to just like move forward from being linked to any sort of like geopolitical risk and just take it back to like a supply and demand perspective on crude. But this kind of coming back right here is something we should still kind of watch for. Amazon, we traded this morning. This was a really good hold. I noticed, so Amazon right now is stuck. Whoever's trading Amazon, I don't know who's trading it. Our target was 266 off like a 257, 258 break. And notice that they kind of got stuck right in between, okay? This area in here. So if we kind of push this down a bit, you can kind of see where the wider short started. That's where there would be like some risk to like 256. I don't know if you guys can see that. Okay, like these areas in here, and then where it's kind of hitting right now, 255, which are our spots anyway. Breaks of 266 on this are basically what allow it to push to those 270s. So 5-2 stall, no continuation on ES. They'll likely retest that 3-7, and like I said, they keep leaving like tiny incremental moves in here to like 3-6, 3-4, 3-3, and they tend to do that when they want to do what? What did we just talk about? And this is why I think this is a more relaxed type of session. There's the 230 breaks. Closer to this period is when we should start seeing some sort of, I guess, real directional break, because even though this leans bearish, this is still within our ranges. Josh, Plug is looking at taking out that 340.
To both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis.
235, 236 is always a general flip for the market, so I would imagine that this could be a point in time that they try pushing. Also, something I noticed too is you see like this little break right here on ES, it kind of is going hand in hand with a stall on crude. Okay, so like this kind of breakdown right here could be a nice break up on the index, and I would imagine if they were trying to do this, it could happen around like that 36. 245, 42 is usually a general point in time too. Since the market's moving off those 10-minute intervals today too, we can keep watching these. They are trying to basically engulf before 240. So that being said, they'd have to try retesting 5.2 by 239. So what's something that you guys could avoid if you wanted to today? There's the 236.52 retest here. 71.52 being retested off that 236 mark. This is what's giving odds of that 10-minute flag basically to engulf and continue. So this is setting up pretty clean for some retest of 71, 61, 62, 63, basically OR failures at that point in time. They're trying to exhaust some of these as early as like the third bar period, which actually isn't a bad thing. That could help a little bit today. I haven't really looked at other structures, but I'm sure there's some that are already in the fourth bar that are just not linked to highs like this. Do you see this? This was 130. This flips at 340. I don't know what, these are like more around like 244 in the morning. Like we hit highs around like 206, 208, but these are in their fourth bars already. And a lot of these flip into the close at like 350, 344, 346. So it's kind of battling between two periods right now. Some that are starting to exhaust in exact durations of highs, but they don't really flip over till after 3 or in 3:30, and then some that started to exhaust as early as these periods here, okay, but they're more aligned with these lower highs, okay? What's something you could avoid? Look at the 106 hold. No one knows what you could avoid trading into a channel pre-fed.
This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American
Let me
families...
pause that for a sec. Had they tested 7133, 38, 41, okay, had they tested these areas here, specifically 31, 33, 34, pre-Fed, you would have had a way higher odd of straight continuation in direction. Does that make sense? They purposely avoided testing this whole channel, and they kind of held the channel all week to save it for Fed, because they know once they break out of the channel, that's when you can get real directional moves. Does that make sense? Hence holding 4.6, 4.7 yesterday, 4.9 this morning, and now they're kind of just going back and forth off 3.7 and 5.2, which really is just like a mid-range, okay, of here, okay, and here from open, and where we have basically risk still too. Do you see that? From session, from overnight highs. That's why you really have to, overnight highs and these lows right now are linked to basically real-time open. I don't know if you guys can see that. Do you see that? What was the overnight highs? The nice thing is these are our zone levels, so it makes sense. But do you see this, you guys, or no? So half the range right now is basically right back to our real-time session open. So I would imagine that there would be a lot of back and forth in this range here until they decide what direction they want to take. Especially off like the real-time ranges, that still leaves that risk on to like the 2.5, 2.2, and basically, especially if they can't get over 5.7, 5.8. This is where risk would really increase. Do You see what I'm saying? To the 20s. That would be off our 4.9, 4.6, 4.7. Off these stalls right here. That's why it was a good thing that they tested 5.9, 5.8 pre-fed, because this is what could allow us to hold 2.7, 2.8, 2.9, 3.3. Okay. Those that are not familiar. Okay, so that's where we are right now. The zone is that's where like they could take it back up. That's hence the stall of 7.188. Means is that 7.158 stall and the 7.162 open, 6.3 open. They're so this is where we open today, technically, okay? In these areas. Which would basically rotate us back. Typically, returns back to channel. What do they do today? What did they do today? This should really, really help you guys. Come on, at least having like a base theory to understand price behavior before a major catalyst like this. So where we open today heavily imply that they would likely return it back to the channel, especially if 7.674 wasn't taken out, or 8.8. Okay, sustainment in that channel. Market is, what's market doing here? What kind of price action did I expect for Fed? This is why I'm streaming Fed, by the way, because I wasn't expecting to see like mass sticks and whatnot. Okay. What kind of price action could we have potentially expected? Which, by the way, wouldn't have been the case had we already tested 7.1, 3.6, 3.8, 3.3, 3.2. Okay, had that already been tested, that's a different case scenario, okay? No. You can have two-way price action had they maybe cleared 5.8, 6.4, 6.3, okay, before here. Or had they tested here prior, but they didn't. Read this again. What do you mean? You look at where you're trading. Which is digestive, sideways, not very defined. Okay, typically you need a catalyst to break price range and get like a clear direction on the side of the trade. I know for a fact that if they trigger a 3.332, then there could be some better direction, okay? It was kind of a waiting game, and it makes sense that oil's kind of just stuck right in between these areas here too. So you're not wrong about getting two directional PA, but that also is relative to what occurred prior to this 2 p.m. 2:30 window. Okay, so where we opened, yes, you can have two directional PA. Okay, but where they're currently nesting right now, they're still waiting to make a full decision. Okay. Oh, no, I'm talking about like these areas here, especially in like into a major catalyst. Yeah, today's open definitely implies that they could break us up, break us back down, okay, and then still break us back up. Okay, yes, that's definitely true. You could definitely have something like this, okay? And they could reset yesterday's shitty close at 7.2, which I honestly think that all they're going to try doing today is resetting yesterday's close, to be honest, but we'll have to see. That would be the best case scenario too, and that's if they hold the 71 20s and 30s, okay? Does that make sense, Sreezer, though? I'm trying to explain, like, what kind of price behavior you could see here. So you could have easily done what? Until after 3 maybe, or like 3:30 or something, or 12:54. What could you have done? What's the correct answer? Yeah, you could do nothing. You do absolutely nothing, okay? Until you get like the clear directional triggers of certain areas that have to break, okay? Otherwise, you're going to get stuck in this, okay? Does that make sense? This is what you're going to get stuck in. And that makes sense based on where they open, where they held, where they tested overnight, having no rate change. And also these structural times not flipping until after 3 or 3:30 or 3:36, which could just keep delaying us. Had they tested here though before, like let's say they tested lower before, then I think they could have had a more defined break. But the issue is they left these, they intentionally left this area as a buffer. Does that make sense? Because so that they could utilize it for basically an hour and a half if they wanted to. That doesn't mean that you can't take trades. It just means that your probability during these windows for range is pretty low, or direction. So yeah, you could take shorts off 5859. You could keep trying longs off 3738, but you could get chopped up slightly in between. Does that make sense? Until one end breaks. Finally, some slightly better sticks on some of the individual names. Yeah, what's another, that's a perfect example too that Fluffy just mentioned, and we talked about this earlier. What's another reason that they could be doing this? Hint, hint. And remember what I said earlier, if they're holding these areas on SPX, it could very well mean that they might want to hold the channel on ES, because you could use this as like a cheat code. 71, basically 7106, 7110, 7114 holds on SPX equate to channel holds on ES, which actually is not the worst case scenario. Okay, why could they be doing this? What's another big reason why? So no rate change. Time. What else? Why could they be waiting? Yes, exactly. Do you understand the objective here? And it's pretty insane because this is exactly what they're doing. They're keeping it in this channel, okay, so that they can build up energy, I guess, in terms of like retesting certain ranges before key catalysts, which obviously we have Amazon reporting after the bell. Google. Apple's tomorrow, I think. We've got Meta, Microsoft. I thought Apple was tomorrow. Well, either way, Amazon and Microsoft are big enough names, but yes, exactly. Okay, so, and the crazy thing is these calculated spots, I wrote these earlier, 3.8, 3.7, 3.6. Do you see how close they were in range? And I used them off multiple variables, off highs, off open, off close, and they all kind of aligned with certain ratios there. So that's how I knew that, okay, they could definitely hold here. Look, this is the 33, 34 point hold. Okay. It's also the 27, 26 point ranges. It's also the 51 point break. Okay, so, and if they hold these areas here, like we said, this is what could get us back basically to 718893. These would be the 50s, and it's what could hopefully push us back into the zone, which is what we want pre-earnings, back to 7108, 7110, 7114. This is looking a lot more constructive, you guys, this time, so that's good. And specifically off this 7136, 37, 38, there was a lot of confluence there, like I mentioned earlier. This area is still enough to get us back to, this area is enough to get us back to 7188, 7193, and to potentially 7206, 7208, 7210, okay? Off 52, 58 point intervals, or 72, 78 point intervals. If they had max range, that would be yes. If they had max range, that's where they could, 88 points, I think, from this area here is 7225, which is basically taking out that weekly high. The 107 point ranges would take us to the channel, which on the report, if you guys read the midweek report, we had the most confluence around 4.5, 4.4. So this area is linked to that 72.45 spot, okay? Just as an FYI. Obviously, they'd need a catalyst for that. They're not going to just move it there without any catalyst. Catalyst would obviously be earnings. But we're not going to progress until I had some calculated times at 254.55 to retest 5.2 and 5.8. So odds were a little bit better here because it was a bit closer to this window and that 301 window, okay? If they can get back over 5.8 and today's open, like 6.3, 6.4, I do think that they have to try getting back at least to 7.5, 7.6, probably before the bell. Like, I would want to see if they can at least get back to this range here and reset yesterday's close. That would be the goal, because yesterday's close did suck. We're still at risk beneath 5.8 and 6.6 though, okay? So basically this area is still that chop zone that we talked about in here, okay? It's like roughly 38 points. Alright, let's start doing a poll. Max range for max. I'll set that for 10 minutes. That way you guys have a lot of time to vote. That's for upside. I'll do another poll here in a second for downside range. Another thing we have to kind of watch for, guys, is if CL starts to properly clear means like closing above and not breaking beneath, that's when there would be a higher odd of actually taking out this area. That's what would, I think, put ES at major risk if, again, they keep stalling this 5.2, 5.8 area. We had the highest odds as early as the 55 in this 301 window here to try retesting this area. Around 321, 325 was a calculated period 2, and then 336 was a flip. So we'll see if our 55 window here can at least push 5.2. So if they start failing here, especially off this 5.4, 5.6, then it's going to avoid this, and then they'll have that failed break and essentially head back. down. The timing window on ES is 5.5 and 301. Tesla's getting some good sticks. I thought I saw Microsoft moving too, but Amazon, you could set that alert at that 264 spot. I guess we could watch 3301 on Amazon too to see if it gets that break. Are you guys enjoying the stream so far? Like, does this help you during like a very volatile or high risk catalyst? Like, I feel like someone had said earlier that they just don't trade Fed because of the risk involved, but like, you can still technically try to foresee the amount of risk that you have. Do you get what I'm saying? Like, by having obviously calculated plans in place, like, yes, okay, if you don't like trading Fed, that's fine, you can avoid it, but then you would just be like everyone else, where you're either avoiding it or you're gambling it, right? So try at least having some sort of like an idea of what direction it could take. Okay, it's fine to be unsure, but we have many reasons not to be unsure, and I said it this morning, okay? If you know your odds and your conditions and what wasn't met and what was met, and what buffer you still have, which in our case was the 2.2 to 3.2, then okay, I think you at least have a confined risk. Like, it's really not that complicated. Does that make sense? And especially if you're aware that they're either going to get this into a channel or a zone. Okay, they obviously tested this zone. Okay, we stalled 72.20s. Okay, we tested 8.8. Okay, these are still things that could help us sustain. Understanding the ranges in between is the important part. So knowing that, okay, I'm probably safe to take a long off 7136, 3738. Okay, we're at an even bigger advantage because we know the times that they could break. So we're looking to see if they can take out 5958. Ideally before 301, because 301 is the earliest point that they could technically retest opening range. Does that make sense? And we know that there's mega cap earnings after the bell, so the risk is probably somewhat controlled. Maybe a different FOMC date, no, but with this case, it's probably somewhat controlled. We also knew that we didn't have the highest odds of holding 5258 because of where they closed last night. Where they closed last night was a huge reason why we didn't clear 88. And I mentioned that before. All right, let's see here. How many think that they'll take out 5859 here ahead of 3? Ahead of 3 is really good too because that's good for structural breaks. That 301 flip is super, super important. It's linked to overnight highs. So you could use a 13 or 97 minute if you want. I was using a 10 minute earlier, which obviously it doesn't really look like the nicest flag anymore, but hey, I guess you could still use it. And we're hitting third bars here with a lot of flips around 305, 301. You can kind of see mid-supply here too, back to where our previous flag was. I remember this from the other day. Okay, when they started stalling this range in here, then they had the fourth bar right here. So a lot of this is going to be right around the same price points that we had prior, which is going to be around the 62, 64. OR being tested on time here. 301 was the highest probability for a retest of opening range to see if they could keep this in play till that 321, 325, 336 window. Even just getting back above 5875, 59 I think is good. And oh, there's that break on plug. Plug finally crossing 338 with volume. 338, 340 was that overhead on that. This should see basically that reduction here on, look at that. See if they retract back though. I would say if CL fails to retrace 106.96 here, that's going to give more confirmation for ES here, okay? This was the 301 flip here on this 97 minute that I was looking at earlier. So 71.59 close at 3. I think that that's a pretty good close. There's also multi-flips in between here at like 305 that I noticed on some of these smaller time frames. So let's see which frames have some decent setups. I was initially watching the 10 minute, but a 7 minute doesn't look bad. Do you see this? When did they trigger that low? 45. So 45, then yeah, you could use that, because that 45 would have been the final stick, would have been ahead of this flip. Use the 7 minute for 307, 314, 321. You could also use the 8 minute, so you can kind of see these little tiny flags that are forming. This is an interesting one because this is aligned with that 244.45, and this flipped over at 3. This runs till 3:15, and it fully negated this bear flag basically. Well, yeah, another thing is too is like if you look at a lot of these structures and the time, okay, they basically align with those closing points here. Do you see what I'm saying? So, do you see that? Look. So, that condition was technically met on time because it has to be ahead of 3. Okay? And that 301 was our calculated time. So, they could sell it off here, yes, but that condition being met is what could keep that extended through those 305, 307 periods. I would just imagine that there could be a bit of overhead here. 17 minute was what was more correlated to overnight, but I want to see which one is linked to a midpoint. It's that 305. I always watch the first 5 minutes after 3 anyway, but that technically is a flip. I'm trying to see what's aligned with that 45 hold. Okay. And kind of like a median point. Like, so this is like 3 to 328. Okay, but I want to see what includes both in the same structure. So it includes 245 and 3. Technically you could use this. This isn't exact though. So what is that? 316, 47, 16. So then you can subtract 2 minutes from that. There's probably some calculated odds around like 13, 14. I'll look for the structure after, but that would make sense. 305 was the next period here, then 07, but let's watch this 14-15 period just because that would include this period here and it would include this period here. And probably within, yeah, like a 15 to 16 minute ratio. .305 seeing some reduction on that stall there at 5.9 once again. So 6.1, 6.2, 6.3, 6.4. This area is going to be pretty heavy because this is still the range that could keep volatility on beneath 6.6 like we said earlier. But retracting 5.8, 5.9 ahead of 3 is what could just essentially keep this extended, okay, through these periods here. think CL would have likely came back and retracted. Yes, it did. That's not a clean retracement though. And Amazon stalled at these exact price points. Do you see that? Right at 3. That's insane. So they are trying to keep this still sideways. ES on the other, or SPX on the other hand, stalling 71.30, 71.32. That was the target that we mentioned on SPX. If ES breaks to 5857, it's basically the top of the bull zone on this, on a 7108, 7110 hold. So again, this was a really good way of kind of seeing like the inverse on ES versus SPX, because these would be the areas that could trigger if these areas don't break, basically, okay? What's something that we have happening right now? Don't get this wrong. What's happening right now at a very important area between 5.8, 5.9, 6.1, 6.4? I'm gonna get water and you guys answer that, okay? I tried a very small long. I only did 4 contracts off that 7137 hold. I got filled a bit higher though, closer to 4.4. I did take 1 contract off the 5.9 test, but I think that there's decent odds that they could try clearing at these points in time, mainly because of those 4th bar exhaustion sticks, and again, all the other conditions that we had. I have it set to stop at break even in case they start breaking it down. But what's something that we have happening here that could help? Specifically at these areas, okay? So let me know and I'll be right back. Some of your responses, you guys, are hilarious. How are we sustaining 6264 if we haven't even tested 6264? You guys are funny. We're sustaining the means, yes. Perfect. We're sustaining 5-2. Yes, that's correct. But what could help us is we have multi-flips, 305, 307, 312. Okay, because we have multiple small flag formations that formed. Okay. No, they actually haven't been wild. I think today has been pretty... This is pretty standard based on the areas that we're in. They're within the ranges, so... And nothing that happened today has been out of range, I guess you could say. Like, this is still within our variables, so nothing has really changed in that aspect of things. It would if they had completely taken out 7133, 32, 34. But them stalling 5-8, especially at this time, that makes sense that they would bring it back down, okay? We have some odds right here, guys, of retesting OR. It was around 314. This could be off, but that's what I figured if they move it in those 14 to 15 minute intervals. If they break it early, that's even better, because then they could push back to 7166, 7167 retest around this 14-15 period. So what could happen here with this? Like we said earlier, we have multiple flag breaks. 8 minutes still clearing. This is the fourth bar between that 312 and 320 period. So this is perfect for breaks. I had some calculated flips at... no, definitely not. You do not want to digest here. Okay? No. You definitely do not want to digest there. Okay, yeah, no, you're definitely do not want to digest. I don't know where you got that idea from. In the 30s, okay, yes. Here, no. No, you don't. You want to try taking out OR. 314, taking out opening range. That was a calculated time that I had looked at earlier. And this was mainly because they met conditions at that 3 to 259 period, along with that 150 to 152. This is where they could push back up 6-6. 7166 being tested off that 314 period. This is a very calculated time to try pushing back intraday highs. 7166 to 68 is kind of the area that I figure that they could try breaking ahead of getting that 74 to 76 retest here. The nice thing is we have multi-flips, which is what could keep us basically pushing. And this should really, really help you guys in terms of these breaks, because these are calculated times of day. I'm just going to mark the 6-8 and 6-6, okay? 314 and 315 hitting these price targets and real-time breaks of OR. Look at where they opened this. That's insane. They opened exactly at real-time OR here. Do you know how crazy that is? Ah. That's pretty wild. This was a calculated time for OR to get retested here. Kind of like our 305 period yesterday. Where did they close? 6,550? And they tested 6.8? They did test 6.8. It's kind of hard to see, but they did test it. Do you see that? That is enough to keep it in play for that 7.1, 7.4, 7.6 retest. I had some other calculated times at 321 and 325. 336 is a flip. That was, I think, the 163-minute. This is off of overnight highs. Was it this one? No. It was... What was it? 36... 162 maybe? Maybe it was this. Yeah, it was that. And to the 97, and we also had looked at, yeah, it was 162 and 243. Okay, this is what I said they could start exhausting from basically here till end of session. Plug getting some breaks over that 340 mark. This is interesting because remember how I said they could start diverging, the two? They're starting to kind of still nest above, even though ES is breaking, okay? And that makes sense if there isn't going to be as much geopolitical factors as opposed to just regular supply and demand on oil. I think our plan is set for us to try getting those 7476 retest guys. Remember, 7476 breaks is what could give us back a break back to 7188. There's two scenarios that they could do today into this close if they clear here. One is they could get it back into the zone. Into the zone, which is 7188, 7193. Okay, with slight odds to push 7201, 7208. This area. Okay. What's your second probability? Is what? This isn't a super high probability, but because of the fact that we have earnings, and normally when we have earnings, we're typically in a channel or a zone, which is why I think they still have a chance of getting it to the zone. What's another probability that we have this afternoon? Well, no, that would be the neutral ranges. And remember I said this earlier? That's crazy that this actually played out. That this buffer worked. They wouldn't break 36, 37, 38. That's insane. And this is exactly what I said earlier before this morning. I figured that they'll probably avoid getting there so that they could avoid major risk, which meant avoiding 71, 22, 32. Probably keep it closer to 36, 37, 38. No, that's the same scenario. You're basically giving me the same exact scenario. The only other scenario would be to do what? What could they do? Look at the daily chart. There's two things that they could do here. Actually, three things, right? I'm talking about real time. Obviously, if they get this back to here, they could engulf and take out 72.32. So there's three things that they could do. Now that they held 36, 37, I think that was my personal area that I wanted to hold into Fed. Okay. Three things they could do. One, they could get it back here. Okay. Two, they could obviously engulf. What's the third thing that they could do? If they wanted to. Let's see how smart you guys are. What's the third thing that they could do? And specifically based on what they've been doing in the past, which hasn't really been the greatest case scenario. What could they do just by looking at this? I already mentioned it earlier. They could reset the close. They could just reset yesterday's pin, which was a really shitty pin at 71.72. Okay, that would be the worst case scenario. Okay, if they did something like that, does that really give us much room to move over the next half hour or so if they want to pin the close? Yesterday we ideally wanted 71.75, 76. Do you remember why we wanted 71.75, 76? You guys probably forgot, but those areas were the higher range to get us back to 72.20s, correct? So if they did something like that, that could give us the breaks after the bell into earnings. Does that make sense? Do you remember why 71.76 was so important in case they close us there? That would have been the better area to close. I was going to put it in the report, but I decided not to because I left it in here yesterday, but those are also the clearing points anyway that bulls need to basically get back up there. Here you go. Let me copy paste this from yesterday. Does that make sense? Those were the mid ranges. They were better. Okay? If they could have closed us there yesterday, that would have been a better close. Okay? So use today's logic then. Okay, this was off 71.44.46, which were our calculated ranges. Let's see if they reset 06. Okay, off here. Do you see Y71? It doesn't really change much for us, does it? Are you guys listening? So getting back to here, all it does that reset yesterday's pin and change the odds for us on the daily? Not really. Like, it could help a little bit, but do you see why you'd probably want to get closer to like 7.5, 7.4? Okay, those give you those odds to get back to those neutral spots. So who was it that was saying that? Okay, so yes, this isn't wrong. Okay, but do you see that there could be another scenario where they could just try to pin the close? Okay, basically reset yesterday's close, ideally closer to like 7.4, 7.5, 7.6, 7.8 this time, so that they could give us an odd of basically getting those breaks in the after hours. So if they can close us like near, this is assuming they don't clear or continue, okay? If they close us near like 71, 78, 79, do you see how this would give us pretty good odds of getting those 72.20 breaks after the bell? Oh, I just want to show you guys, especially off these ranges here, okay? Does that make sense? Our weekly highs, I think, are the 2-3. So 71.80 gives us a pretty decent shot at that. If they pin us right back at the zone into the close, we have a decent odd of getting into the channel. That's like the easiest way I can explain this. I don't really know how else to explain that. But that's how you could end up with a doji on the daily. Does that make sense? And then still technically push in the after hours to engulf into earnings. Because technically speaking, those areas are still linked to getting back to 72.08, 72.22, 72.32, 72.40. Something else that we could look at today too is the differential in range between how much they took us down by. Could be, if they engulfed us in the after hours with earnings, that could be the range that they push us up by. So maybe close to here, which I think is the top of the zone. And don't forget that this area was really calculated around 3637 today, because This is what gave basically an odd of those 25-point intervals to not expand, because that's what would have potentially pushed us down 50 points. And because they're doing this now, we obviously need a 34-point break, okay, to get some structure breaks. And that would take us back to session OR, which could then push us the 44-point intervals, which would get us a break back over 8283. And considering off of opening range, this is the 25-26, and these are core ratios, that's what could give us the breaks of the 50, 52, 58 point range, okay? That would be these here, okay? This is why there is confluence there too in the 70s, and then likely why there could be some confluence here around 88, 103, 106. That's off lows. Off open, it's the same thing as this, basically. Okay? And if they extend, same idea. Do you see what I mean? Like these areas would be roughly those ranges. Off session open, session close, which was 71, 72, it's going to be right around here, which is right aligned with our 7220s. If they had a 66-point break, that'd be the channel, but this would be like the bigger breaks off session open, okay? Off overnight highs, that's where they could expand, which I don't know if they're going to be able to do that today, to be honest with you, but from like a high to high perspective, then these would be like max ratios. I don't know if they could do that specifically today, that these would be like the much bigger breaks, obviously, to like these areas up here, like 7290s, 7260s. But I guess with mega cap earnings, anything's possible. I was mainly looking for like the 7208, 7220, 232, and potentially the 40s being retested. Okay, this is a really good example, you guys. Okay, remember before I left, I said what we have favoring us during this window are multi-flips, okay, between 305, 307, 310, 312, and then our calculated times at 314, 315. Did we have multi-flips during this period here? No, not many. So that's kind of how you get like some sideways price action. And what we have to really start paying attention to now, especially before the last 30 minutes, is whether or not they want to make this pinnable. Okay? CL retesting this 107.68. That's a structure break on crude. And that's huge. That's a huge break off 107.76. Okay, so this is where they could start getting some volatility back on ES back to 71.58. And this is right off that 330 period. This was kind of like the next window here on ES. See if ES can hold the 5.8. Because this period here, I'm 90% sure was linked to here. Or not here, sorry, to the 36, to here. This is how I'll determine if they're going to just keep this pinnable into the close. What's a third scenario that they could do into the close, especially on stalls of 7.1, okay, and 6.8? So no retest of 7.4, 7.6. stalling 6871. What would that look like actually if they did that? That is super clean. Do you see the structure break right here? So remember I said back here how they brought it back up and that negated? That wasn't fully clear, but this is cleared. Do you see this, you guys? So a cleared trade is when they continuously open above and sustain above. So it started clearing right here. Here. This was when it cleared. Okay, and then it completely stopped engaging with 106.96. Do you guys see that? That was the cleared trade to get it basically to try testing this 108.99. That's a huge break on oil, you guys. Do you see that move on that 107.68, 107.76 break? That's insane. And mainly with the clearance that they had off that spot there too, like this, when it cleared. So this wasn't properly cleared, but once they kind of kept it above here, it was. This is obviously going to imply some volatility here. The one thing I'd watch for though is to see if ES can come back and retract that 5859, probably by that 35 to 36 window. And look at where SPX stalled. That literally right at our 71.38.62. That's insane. Good call on that, on the stall on SPX, Brendan. Around that 71.38.50 spot. So what's the other scenario, you guys? So we have three scenarios. One, they can take it into the zone. Try getting those pushes. Odds are not super favorable. Two, they could keep it pinnable and reset 71.72 open, 71.62 open today. So like kind of keeps it stuck between these ranges. What's the third thing that they could do? I really hope you guys captured at least some of the move on oil. That was a really clean break. And we took oil long again 2 weeks ago when I noticed that they started hitting somewhat of a range down here on the 17th and 20th. So far that's played out really nicely. And today's the calculated flip for the market on the 29th. So we were using the 8-day on oil previously, which also flips on the 29th. If anyone's trading oil, use that 8-day. I was using this before, okay? This is also what helped me time those stalls on the 7th, okay? So those stalls on the 7th were basically the market stalling here. This was the final day ahead of the flip on the 6th, okay? I don't know if you guys can see that from here, but that's when they made the lower high. This is when they sustained. Okay, so it's kind of moving in like roughly 7 to 8 day intervals. So closing price on oil today matters a lot because this is basically what could give it. My oil chart got deleted, or I can't find it, so I had to redo this morning. This is what could give it that retest of that 119, 121 in these bigger breaks obviously to 135. I'm not looking at that like immediately, but it's something to kind of keep in mind. Okay, do you see the retracements here at 136? Yes, exactly, Josh. Exactly. If they wanted to just kind of, they're still undecided, they would just take it back to the channel. What would be a bear scenario that isn't technically bearish, but like in terms of like a trade, it would be downside? The only other scenario would be like here if they stalled and then broke it to the 20s, but couldn't they hold 20s and still spike it back up? Do you get what I'm saying? Technically that would be the short trade, but that area holding is still a bullish area to hold, so it doesn't mean that they can't bring it back up. I didn't have super high odds for that to happen though. $336 retracting and retracing 71.58.59 is what would put this again back into play for this 345 period. Yeah, exactly. And technically they might be looked at as being bearish, but it's not, right? Because it just goes back in line with this. Can you guys see? This is kind of the area that they're in right now. They're having a hard time accepting above like 6671 to confirm that trend. So yes, okay, stalling here, if they fail the channel, could bring it here, but if they stay above there, that's still technically bullish. It could still get you back here. Does that make sense? I feel like you guys should be more than prepared, like, and have an exact idea of how these areas can trade. And we have like the exact points in time too of them breaking. So 336 getting back above 5.9 is just going to put this 345 mark back in play here. I did figure that we had a lot of late odds today. I don't know if you guys remember, I mentioned that earlier. So typically when there's late odds, they might just want to do it into the close. Plug still sitting right at that 340 mark. Let me reset an alert for this. Where is it? I'm going to set it to 340. Look at the sell-off on CL. Because that triggering this though today that still needs to be noted, okay? Because the 29th is the flip day on crude. Look at this. Perfect price on both. So I think my guess is right that they're just going to reset the close. Okay, so those 71.70s. That's my guess. I could be wrong. Let's do a poll. I didn't actually see the results earlier. I'm going to do one more poll. Max range for real-time session. Highs are in 71, 71, 71, 74, 71, 74 to 71, 76. I'll put that for 3 minutes. Can we get some votes on that just to kind of see where everyone's at? Gold kind of breached a little bit today too. It's just barely holding the line here. It needs to get back above here. I don't know who's trading gold, but I can share that. And then Amazon is, again, still kind of stuck between 264 and that 50% threshold. Crude holding off that 107.68 and 76. Can you guys vote on that, please? What do you guys think will be max range for the real-time session? We can do one for the actual session afterwards if you want. So we're well aware that we need 7476 for bulls to progress anyway. And as long as they keep this beneath 666871, that's going to be pretty hard for them to do. I did like this time frame just because it's pretty correlated to those highs overnight, and then that 210 hold. This runs until session close, so I figured maybe there's some intermediate point here. Like 121. I didn't measure it, but I think it's like right after the bell. Yeah, it is. Plug is basing a little bit here. Oil is leading the market today, for the most part, and semis. This one has been insane on Intel. Remember we looked at that earlier this year? Do you guys remember on Intel? we talked about it back in the fall and earlier in the year that they really could just set this up for a much bigger break. Let's see if I can find my old template. To find it. I don't know if it was this one or not. Look off these structure breaks here. This clearance break here. I think this is where, this isn't the template I'm looking for, but I'll find it in a second because that one, I think it's this. Like this structure break off these ranges in here, this is what could extend this when we looked at it. And specifically off these ranges, because the idea was is if they gave it the full extension, like from the range that they expanded down, basically like this area here, I don't know if you guys can see that, that could be the same sort of intervals that they push it in. So basically breaks above like this range in here, okay, and this range in here. This is just a very, very dumbed down way to show you guys, but okay. That's what could expand this to get like pretty mass structure breaks, okay? You can write these down if you want. They're not the exact spots, but I just want to show you guys what they basically did on this. Do you see the clearance break here? And typically when you do that, that's where you could keep pushing. So those $110, $120 price points, I don't think that those were off. Like those made sense from a much wider scale, like even from this full exhaustion here, okay? And then from here. And if we look at this from last year's highs, that's basically where they could hit a huge area of extensions. Okay, so do you see this? Like where they're hitting right now? This is huge. So this is the easiest way I think for you guys to look at it if you wanted to, but like this, somewhere in here. Okay. Do you guys want this link? I'll send it in here. I calculated Intel back in November, but I don't really feel like searching for that right now. But this was the base of like what we looked at, okay? And you can kind of see like once they came and cleared this here, this area, you can see it, okay? These are big overheads. Long story short, this is what could push it another like 40, 50 points on this name. So you could look at like ranges like 130. I think our targets were like one for the year were like 132, 141. Wider ranges around like 158 or 148. I'll go back and try finding it later tonight. Okay, so you can just essentially recycle these if you want. Actually, someone might have made an Intel thread. You guys made one for Apple, gold, silver. Maybe not, because that is the name that I trade a lot. So if this thing can close in these areas here, that basically is implying that they might want to extend this. Let me just reset that. Well, they're still holding 5.8. plug getting that 343 break here into the close. These were some of the calculated targets. I don't know who traded this one. Even off a stock trade, this was good. We did the $3 calls earlier. Off that 313, 320. Look at the volume coming in here. All right, what do you guys think? What did you guys vote? You guys voted that highs are in? So it made sense that they might try to reset real-time open or session close. Like, it makes total sense, but I still think that they have a shot at least retesting 7-1, 7-4, maybe like by our 5-4, 5-5 windows. I would say if they can't even get back over 6-8, 7-1 by here, then no. But there were a lot of odds until session close, so we'll see. Hopefully they give us a better closing spot this time. This was like basically right into the close. I didn't think that they could get it to the zone based on them stalling back here, this reduction in range. How much range did they reduce there? And even this reduction here, like all of these were small reductions that basically prevented it from like continuing. So like this was 6 points. This reduction here was roughly 13 points. 13 points is roughly around this area here. Okay, or this area here. So I think that makes sense that they basically kind of stalled, but that doesn't mean that they don't have odds of at least testing these areas. So do you see how my analysis was pretty spot on, that they could just try resetting the close today, you guys, in order to try re-triggering this? Because don't forget, these areas, the 70s, okay, are linked to what? Don't get this wrong. What are these areas linked to off these lows? What's the median basically of like these spots? So 71.37, let's say, and 72.22. And then 71.37, let's say, and 72, let's just go with 72.08. So 7137, 7208. What's the median of that? That would take you basically right back to literally where you open closed. Okay? Does that make sense? But it at least gives you an odd of resetting 08. What about the median between our 7137 lows and our 7205 open close, which we knew was calculated? The only difference this time is 72 is not progressive, but is 7208 progressive? Think about that for a second. 71, 72 isn't progressive, okay? But is 7208 progressive? Where they close here is going to give us a pretty good idea of where they're going to push into the zone here into the close, okay? Yes, it is progressive. Thanks for sharing that. Yes, it is progressive. Okay, 72, 05, 03, 04, they were okay. 08's a bit better. So, and the only reason it becomes progressive is because it's a lower low, but same hot, same close, but could still give you a slightly higher high. It's basically you can recycle that like 3.75 points on upside or something. How much time do we have left? So I'm thinking they could retest session open right at close. I could be wrong though. A lot of this is going to be based on whether or not they can clear 6668, probably before our 5-9 stick, so like right off 5-8. Plugs testing that 343 here still. CL is just nesting right at the 107.68 into the close. That's pretty calculated. So it's kind of a battle here between session open, okay, and real-time session open. And then the 5-8, it's kind of like they have it stuck basically between here. The only reason they still have an odd of retesting this is because they still sustained at that 350 mark, but obviously if they start putting volatility back on, if they keep it stuck in the means, who here said earlier that that would mean two-way directional action? At this point in time, it would, because now you've already kind of tested both sides, okay? 71.58.59 being retested here on a 71.66 stall into the close. This could definitely imply some volatility here if they can't bring it back up to pin where we opened today, which I figured would be the case. Even getting a close over 6668 would still be better than 6364. There is higher odds right at 4 though, so we'll see. Do you guys want me to stick around for earnings on the Squawk feed? I don't mind if you guys want. How much time is left in this? Okay. So I figured they could probably pin close to here with a slight odd of getting back. I didn't think that they could trigger this until 4, but I could be wrong. Like if they push like final seconds like to here. But these were my thoughts into the close. Okay, let me log in. There it is. See? 4 p.m. triggering our 71, 72, 71, 74, 76 retest. I figured they'd probably do it right at 4, not real time. That's perfect. You guys can cover there if you want. If you want to keep some contracts. I intentionally left it for the close because I figured we probably won't trigger this till just after the bell. There was a calculated time at 4:11 today too, so we can kind of keep an eye on that. Really nice work on that break. 71, 76, 75 tested. Amazon also clearing here. Okay, so we'll keep a very, very close eye on Amazon breaking over that 262.48. I would have preferred Amazon closed above 264, but I guess sustaining 262.48 was still okay. They just could just have some volatility here on both sides. ES tagging 7.6, okay, it could still keep odds open because they still tested it, which they failed to do earlier. But that being said, I still think that real-time close could imply that volatility on both sides, okay? So this is basically what we thought could happen, especially if they keep it beneath 7.1, 7.4 in real time. But testing that 7.6 here is what could keep the window open of this, okay? This close here is what could keep the window open of this, basically retesting. And what? Did they get rid of my access? Oh, I logged into the wrong account. How do I log out of this? Just give me a second. As long as they can hold 5-1, 5-2, this range in here, then they'll still be okay. That 7-6 retest is what we need to get that 8-8. And like I said, these kinds of closing points, let me just clear this out so it's easier to see. Okay, these kind of areas here, you guys, they're, do you see this? Okay, that's a 33, 34 point break. Remember I said in real time they'll probably stall 34 points, but in after hours that's when they can start breaking 44, 55 point intervals. Okay, so like this would be the 44 point break. Do you see it? And then that's when they can start triggering 52, 55. That's how we'll get 8-9, 8-8. Okay, these types of breaks, like 70 points is how we could get 7209, 08. Does that make sense? Off these intervals here. And then the bigger extensions is if they can push the zone into the channel. Off this type of a close, that's how you could get core to core on the week. Currently, right now, they're basically breaking like 22 point moves. These 25, 26 point intervals are going to be right around the zone area, like 7193, 94, 95. 33 points is around 720304. That's where they closed prior. 44 is around 14, and then the big spots are going to be right around our weekly highs, okay? Of like 72, 22, 23. Did you guys hold some SPY contracts into the close? That's what I did. Just because odds were higher after the bell. 71.88 being tested here. I still think that they have odds of giving us these retests today, and maybe the 20s and 30s. Okay, this was my max range, but again, it's going to depend on where they clear. That wasn't a terrible close. It was an okay close. At least to give it a reset. Crude closing here too was pretty calculated. Plug closing at 343 was also really calculated, and 340. Intel is still breaking after the bell here. Look at where SPX stalled into the close. This is interesting. We got our 71.88. Okay.
$20. The estimate on EQIX
Can you guys hear that?
was $4.29, so that's a miss for Echo Quebec India X-ray. MAT Mattel, first Ford, letter F, reporting 66 cents. The estimate on letter F was was 19 cents for letter F. Revenue 43.3 billion. The estimate was 39.07 billion for Ford. Shares of Ford popping here of 12.56, up 32 cents on letter F. Ford raising its 2026 adjusted EBIT guidance to the range of $8.5 to $10.5 billion. PYPL, PayPal announcing strategic reorganization to accelerate growth. report earlier from CNBC, PYPL, now reported by the company. PayPal shares not trading as of yet. PayPal says transition to simplified free business operating model. Businesses to be checkout solutions in PayPal, consumer financial services, and Venmo payment service. That's PYPL. GOOGL, Alphabet, reported $5.11. The estimate was $2.62.
Amazon's retesting here. $2.68 should be marked on here. I don't know why it's not.
That's correct. GOOGL sales $109 billion. The estimate $106 billion for GOOGL. Shares of Alphabet or Google popping here, $363.50, up about $17 on GOOGL. Company raising its quarterly dividend to 22 cents, 5% increase in GOOGL.
Google getting a pretty nice pop after the bell. Microsoft selling off here. Intel's still moving.
MAT, Mattel, we reported a loss of 20 cents. The estimate a loss of 21 cents. Sales of 862 million. The estimate 804 million for Mattel. Michael Alpha Tango.
Gold also retraced into the close if anyone cares about gold.
Mattel share is popping to 15.35 at the high. 56 cents for MAT. Mattel company raising its 2026 adjusted earnings guidance to $1.27 to $1.39 for MAT. Mattel.
So really interesting space for the market. Gold kind of sitting right at the 45.66, 68. Crude closed right at the 107.68, 76 and pushing a bit here. ES closed right at 71.70 and pushed 76 at 4. Thanks guys for watching today, by the way. I hope you guys had a good afternoon and captured at least some of the long on ES or maybe an individual name or oil or whatever the case is.
CVNA Carvana reporting $1.69. The estimate was $1.50. Sales of $6.432 billion. The estimate $6.077 billion for CVNA Carvana. Carvana shares popping here, 440.02 at the high, up about $44 right now at $435 off the highs on CVNA Carvana.
I'm just gonna mark these.
FORM form factor reported 56 cents, the estimate 45 cents. Sales of 226 million, the estimate 225 million for Foxtrot Oscar Romeo Michael.
Oriole making a bit of a comeback, which makes sense because Oriole's still closed in a good spot, whereas ES not so much. So I'm not really surprised to see them sell it off like that because crude closed actually above this area here, whereas ES had closed beneath that 7.2, 7.4, 7.6. Even though they did tag it in tests 8.8 and 7.6, that still implies that they could easily, like we said before, like if they come back, stall here, or maybe stall the 8.8 range, it means that there's still an open window to, we still have that downside risk to this range in here. It's kind of just open on both ends. I figure they would just kind of doji this session today, which is exactly what they did. We'll see if they can sustain here though. There are some flips at 410 and 415. I don't know if I'm going to stay for the whole session, but Microsoft sold off pretty heavy. Google's holding. Intel continued to climb and then stalled.
Google's Waymo, or Alphabet's Waymo, says surpassed 500,000 fully autonomous rides a week.
So in terms of weekly range, this doesn't really change anything for us yet. We're still within our intervals. It's more so once they start triggering the 7110, 06, 08 again, which we haven't done yet.
Alphabet said first-party models like Gemini now processing more than 16 billion tokens per minute via direct API use by customers. That's GOOGL.
Did any of you try a short on the 7176 failure to close or 7188 stall? That's where I took off a good chunk of the long, but I didn't do a short. I guess I could have. I didn't really want to trade after.
ALEC, Elector, to discontinue phase 2 progress ad trial of nivacinibart in early Alzheimer's disease following interim futility analysis. Company to continue advance AL037137 for Alzheimer's disease. That's Alpha Lima Echo Charlie, ALEC.
You can't sell them after hours, Novamon?
VIAV, Viavi Solutions, reporting 3 cents. The estimate on VIAV.
Well, if you did SPY puts though, you should have been able to cover them before 415.
Was 23 cents. So that's short. Victor India Alpha Victor.
I just had the 3 contracts that I had held into the close. I covered.
AR Intero Resources reporting $1.72.
I covered 2.
The estimate was $1.13, so that's a beat for Alfa Romeo. Revenue $1.95 billion. The estimate was $1.66 billion for AR. INVH Invitation Homes reporting FFO of 40, adjusted FFO of 41 cents.
We would only go lower, Noble Mom, if let's say they don't hold 712233 during this period here, and then take out that 710610 area overnight. That's what could re-trigger last week's lows basically, and potentially those 50s. But yeah, 7188 rejection is pretty strong, so It didn't really have high odds
eBay
of clearing,
reported
but
$1.66 EBAY. The estimate on
they
eBay.
could still try holding 7132 here, just FYI. But then again, they'd have to retrace 71526658.
Was $1.57, so that's a beat for eBay. Revenue $3.1 billion. The estimate $3.025 billion for EBAY.
Yeah, so I would say that basically them not.
ALL Allstate reported $10.65. The estimate on Allstate was $7.29, so that's a beat. Revenue of $16.9 billion. The estimate was $15.099 billion for Alpha Lima Lima. KLAC, KLA raising dividend to $2.30. Kilo Lima Alpha Charlie. KLA reported $9.40. The estimate was $9.14, so that's a beat for KLAC. Revenue $3.42 billion. The estimate $3.369 billion. That's a beat for KLAC.
And that's exactly
Again, the company
what they
raising their
did.
dividend to $2.30.
I had just said that like a few minutes ago. They could literally try.
Share is right now trading down
Which is
about
literally what they're
$126,
doing.
$16.90.87.
And now we see if they retag 5.8.
That's KLAC.
Basically what they did is they left this little buffer zone in here, okay, for after hours into earnings. They're just being very calculated about this. Like they're going high, not high enough. They're tagging but not sustaining, okay? They're breaking down but not low enough. Does that make sense? Not high enough.
Meta shares off the lows now, $629.56, down about $40 following their report.
So these breaks here is basically if they can get back to 5.8.
Meta beat on earnings and on sales.
Which can still get us back to here, essentially.
Raising their expenses.
And they did still tag 8.8 twice, just FYI. it's what's making downside more controlled. Does that make sense? Like, if they hadn't done that, then it wouldn't be as controlled, okay? But the fact that they keep triggering A8, okay, and keep getting it back to these areas here, it's not high enough and it's not low enough, okay? So they're not taking it high enough to close it. They're not closing high enough. They're not opening high enough. And even though they're testing A8, they're not sustaining above, okay? The same thing with real time. They're leaving a buffer in this box in here, which is what's kind of keeping you back and forth. Does that make sense? Like, and usually that's what market makers would do if they kind of want to leave risk on. And we talked about that earlier too, especially off like these types of closes. Like, we needed at least like 7.5, 7.6. Does that make sense? Okay, so it still leaves that, well, this is the easiest way I can explain this. It still leaves like this little buffer in here, okay? Based on them closing here versus 7.4, 7.6, whatever. Okay, and then the overall differential in range is probably close to 17, 20 points. This could be what is still a risk, okay? This is where risk would obviously really increase. Does that make sense? If they were to bring it back beneath these areas here. And that makes sense because that would be basically our 7110. Remember what I said earlier, like SPX could be used as leverage to where they could potentially take ES, okay, in terms of like risk. So what they're trying to do is they're still trying to avoid this, which is kind of where there's much bigger risk. And if they can get back and retract here, then it's likely to reduce the odds of seeing that continuation on the downside. If they recycle this up from here, that's where we could get those pins back at 72.05, 04, 06. Let me know if this makes sense, you guys. This is kind of it's a different way of looking at it, but from a range theory perspective, it does make sense, okay? Because, or you could look at it from like here, from where they actually closed and where they stalled to here, okay? But I just figured from this range in here, okay, or this max range areas in here, okay, this is how they could technically get it back to these areas here, which are those neutral zones. Assuming they avoid the risk down to like 7, they could technically still take it to 7110 and still retract, but they're basically stuck in between is what they're doing. Does that make sense? There. That's why 5.8 is a trigger. Here you go. Does that make sense? You're kind of like stuck in between. That this hasn't really, thank you. You haven't really made like a full, this is what sideways two-directional price action does, basically. So yeah, you would need 5.8, and then you'd need 6.6, 7.6.
CVR Energy reported a loss of $1.24. That's wider than the 40-cent estimate loss for CVI, Charlie Victor India. CVR Energy sales of 1.98 billion. The estimate was 1.695 billion for Charlie Victor India.
This is the downside. Okay. You guys can keep these with you if you want. If it helps. So 5.8, basically this area here is pretty much the median. Do you see that? It's also pretty aligned to actually where we opened today, around 716261. Whereas if they kind of hold here, okay, and where they closed at 71, do you see that? That still gives some odds of getting the 7211, 7210. But they'd really have to push 71 again off the actual close. They need back over 5-1, which they're getting so far. For progression to occur, it's the same thing. You still need over this 7677 off of 88.
CMG, Chipotle Mexican Grill, reporting revenue of $3.1 billion. The estimate was $3.067 billion for Chipotle Mexican Grill. Charlie Michael Golf.
Off 88,
earnings of 24 cents. The estimate was 24 cents. That's in line with estimate on CMG. Chipotle shares now at 33.30. That's up 31 cents.
So maybe if they can get it back over this wall here at like 430, over 7158, 5961, basically back over like the real-time opening range and this area, then that's how they could avoid downside. But then they would have to get back in the zone overnight. Does that make sense, you guys? So then our overnight conditions would be, okay, to avoid downside risk, let me turn on the mic so I can have the bot record. One sec. I just got such a bad tummy ache, I don't know why. Okay.
MGM Resorts reported 49 cents. Adjusted, the estimate was 53 cents. So that's short. Revenue $4.5 billion, beats the 4.36 billion estimate for Michael Golf. Michael?
Okay, I'm gonna wait for him to stop here.
FMC reporting an adjusted loss of 23 cents. Foxtrot Michael Charlie, the estimate was a loss of 33 cents, so that's a beat for FMC. Revenue 759 million, beats the 744 million estimate for FMC. ROLY, O'Reilly Automotive, reported 72 cents. The estimate was 70 cents, so that's a 2-cent beat. Sales of 4.56 billion, beats the 4.456 billion estimate for ORLY. AWK, American Waterworks, $1, short of the $1.11 estimate. Sales of 1.207 billion, beats the 1.196 billion estimate for AWK.
They're kind of just stalling here. They took it back over 5 or 716163.75, and then you can kind of see they brought it right back again. So it's just keeping that same sort of two-way. Google held up pretty well. It's mainly Microsoft that. Obviously Apple tomorrow is going to be a big player, but Amazon held up pretty good too. I'm not surprised that Amazon didn't really move too much because it kind of stayed stuck this afternoon. Okay, it's mainly Microsoft that was disappointing and made a. So unless these two can recover a bit after the bell here, then ES is probably just kind of stuck within these volatile areas. Some of the conditions for overnight could be, I'm going to close this if you guys are okay with that. Some of the conditions for overnight could be that we, let me close this. We would need to try, if they close us beneath 71, even beneath 71.71 or 72 or 73, okay, like anything beneath there is obviously going to imply some volatility. As long as we're still beneath 71, 74 to 76, like in terms of a closing price, it's going to be pretty hard for us to get those structural breaks above 71.88 and retag 72.01, 02, 03, 04, 06, 08. Overnight conditions, I think on this 7131 hold, we still have some room for downside around 71.21, 22, 28. It would be in our best interest if we don't get a super progressive close, like basically if they close us exactly where they opened us today, around 71.63 to 72, then we would ideally want to try holding those ranges. Otherwise, the 71.06, 71.10, 71.08 to 71.14 is back in play, and that's kind of what could extend the downside and put us at a much bigger risk of those 70, 78 to 81 retest. I think that those odds are a little bit low, specifically since Apple has earnings tomorrow. I don't think that they would fully give up the range overnight, if that makes sense. They may want to try keeping this pinnable. Remember, the 7100s to set beneath, as long as you're beneath 71.74 but above 7100, you're basically in a chop zone, okay, which is exactly what we're doing here. The fact that they did trigger 71.88 is what is giving us a little bit of an advantage. Okay, so if they're somehow able to sustain 3-1, okay, these areas still can technically take us back to reset the close. Even if it, like right now, we're hitting basically a 33 to 34 point ratio here off lows. So off 713125, 33 points is 7164.25. Okay, if they're able to get this back to where they open, that's around 41 to 44 points. Those 52 to 58, 59 point breaks from this specific low, okay, are right around the zone. So 7190.75 would be the current high to low. Around the 52, 53 is around 718485, which is our weekly open. 56 to 58 point ratios are 7188. So from that kind of a perspective, if they're able to somehow get us back into the zone, I'm not sure if they can tonight. I feel like they're kind of running out of time, but even if they just reset the close back in those 70s, it's still going to keep us at an odd of getting back into the zone overnight, and then that's when we could just reset our overnight conditions. Does that make sense? So same conditions would apply. You have a tiny bit of risk down to the 7120s that we could use, but if that ends up being the case, you guys, then we most likely would be stuck on the week. Does that make sense? Where they would start, at that point, that's when they start limiting range. And the reason being, let me just turn on my screen again, is if they did something like that, okay, then, and by that I mean like take it down to the 20s. Do you see how then we could maybe be stuck in these areas here? Okay, this would already be like a 44 point range right here. We'd be in the 50 point ranges here, maybe 88 here. The 70s here would kind of keep us beneath the zone, and then max range on the week would basically be core, okay, which means we'd have a very low odd of, like just a tiny odd of taking out weekly highs, but not super high. This is if they brought us down to these 20s overnight. Okay, so I'm just giving you two case scenarios. So 20s overnight, they don't really give us a very high odd of taking out weekly highs, but you can still progress and come back and break above the 71.20s. Okay, so it's kind of the same plan. Hi, Barry. It would be the same thing, basically rinsed and repeated over and over again. And I did include the Substack thread, which I can share here, that has some of the visuals, and I posted them to Twitter, but it really is the same thing being rinsed and repeated. We haven't changed any of our ranges. We're still within our ranges. We're still triggering the same spots. Plans are still applicable off these areas. So again, nothing has really changed. So we would just kind of reset this, and that would be based on the variables that we have. Okay, so let me share that with you guys one last time. Okay, so obviously they keep stalling 8893. Even if they brought it back to here, it doesn't mean that you can't get back to 718893, but I would think at that point we're probably limited on these ranges for the week. Does that make sense, you guys? Or before I sign off, and I am recording this so I can summarize this after, but whereas if again they keep failing this range in here, this area, the 7476, and can't stay above 7188, you're still going to continuously have that risk, okay, when you fail below 88, of coming back to these ranges here. The only thing the market's done is they haven't really tested the bigger area of risk, which is honestly this 7122 to 7106 failure. Okay, so they're still kind of holding the line in between here. This is really what would cause a much bigger reversal, and so far they haven't brought us there yet. Does that make sense? It won't be until they actually fully start losing 2206, 10, 14 that it gets weaker, and then ranges start aligning closer to retesting last week's lows. All right, so for now we're kind of right in the middle if you think about it. Do you guys want a copy of this? Like, I think I sent it, but for those that I guess watch on YouTube or Twitch and don't really follow Substack, I think here. Okay, there's the chat if you guys want to follow along in there and kind of watch the visuals. Okay, we'll see where they close. I think we still have a decent odd of at least closing flat, which that was my thoughts if they stall 88, and so far that looks like the case. It looks like they're going to have that doji that we talked about. So a doji is not the worst case scenario, okay? So structure wise, we're actually better off closing beneath 7.2, correct? Because that's what could give us basically this. We could have a nice star reversal tomorrow if this would be the only time that it's actually okay to close a little bit lower because of structure, but it doesn't necessarily mean getting like these big breaks. That we could just maybe stall those neutral ranges. Okay, so closing a little bit lower wouldn't be the worst case scenario, with maybe getting more like a star reversal at that point. Okay, yes, you don't want to close too low and you don't want to close too high, so you'd want to probably stay between 71.58 to 71.71. Does that make sense? And kind of like what we talked about before, these current ratios right now, they're not terrible, because off of this low, those are still the 50% ranges of getting back to these closing points. Okay, does that make sense? So you would still, so basically 71.37, 71.31, these median points between there and 72.04 is around 71.68. It is around 71.63. It is around 71.66, okay? Do you see what I mean? Or off the 70, basically they give you odds of getting back to your neutral ranges, closing in the 71.60s and lower 70s. If you somehow, some way manage to close above 7.4, 7.6, while that is great, they finally did it, it's not the best looking structure at that point, because this would end up turning green, and you could eventually, you could have like a 3-bar down break. Do you get what I'm saying? If you had something like that, that would be the worst case scenario. So that being said, are you guys listening? In the event that market some way, somehow, okay, managed to get a close above 7.2 today and closes green, while that may seem good from a price perspective, it's not from a structural perspective, okay? Because that's what would give you a risk of having maybe like a 3-bar reversal like this on the daily. Does that make sense? If that's the case, okay, you absolutely cannot come back down. Remember how sometimes you have to just keep going? You cannot turn back around. And I've said this before. It's kind of like the market's making a run for it. Think about it like that. Like the market is like stealing a 7.4, 7.6 close. Okay? It's stealing it and it's running away. Okay? And it can't turn around. Okay? It has to keep running. So otherwise then it's going to come right back down. So at that point you have to like basically negate. That would be to avoid a 3-bar down scenario. Make sense? Or like a scenario of maybe like bearish engulfing, because in here they hit 90, right? So technically if you close green, you could have like especially if they don't take out this, I'm giving you guys like all 3 scenarios, okay? If they did something like that, and let's say they stalled here, that kind of a close where they run but don't push high enough, let's say they stall these areas here, or 7188, 7193, 7197, could you not just basically come right back around and then make a lower low at the 20s? Specifically if you avoid them here, because we still have that buffer. Do you get what I'm saying? They kind of left room on both sides. It's kind of annoying, but it makes sense, okay? Based on why they would do something like that. So off of 9, I wouldn't use this high. Off of the 9.3, because that's more calculated, it would be roughly the same. Okay, so even where they hit is technically not high enough. So that would be a scenario if they closed up but then didn't negate, okay? That's where you could see some 2-directional price action, because, okay, finally, it's kind of like, you know when someone keeps messing up a bunch of times and then they finally get it right, but then you're like, okay, well, too late. You know, it's kind of like when someone apologizes a little too late. That would be ES doing something like that if they did it today, where the structure doesn't favor it anymore, okay? So those are just some scenarios going into tomorrow. I feel like they'll likely keep it beneath 7.2, which honestly at this case, that's probably the better case scenario. And like I said, if they did something like that, then at least it gives us an odd of getting like a star reversal tomorrow. Maybe getting back to here, 72.01.02. It just resets our conditions from last night. Does that make sense? Because if you get a star reversal, at that point, do you want to try avoiding the channel? So let's say we close in the 60s. Okay? Do you want to avoid the channel at that point? It's kind of an interesting way of looking at it, because closing in the 70s, technically you could afford to go back to the 20s. Closing in the 60s, even though it's closing lower, you probably don't want to go back to the 20s, okay? So if you close there, to structure-wise, you'd probably want to sustain, okay? Sustain the means. Probably not go back beneath 4451. Does that make sense? If you did, it's not the worst case. Could you still engulf? So assuming, let's say they slightly take out this low tonight. It's nice that they took it only to 3.1. Okay, so they left a little bit of room for us, okay? In between here. Around 71.21. There's about a 10-point buffer, 12-point buffer. From a max range scenario, if, let's say, they tried taking that down. Okay, you see how it's about 15, 14 points on each end here from prior high to close. Do you see this? Do you think that's a coincidence? What do you guys think? Probably not. Okay, so again, this is kind of where there could be some like mid-range confluence. Do you see this? From this high to open, this high to close, this high to, do you see that? This high to here. It's kind of hard to see with this in the way, but okay. So even on this like range, there's still about like 5 points or so. Because if we did the same thing here and extended this to 18, that's closer to like 71.27. Okay, do you see what I'm saying? Obviously, breaking from open here or close is where you'd have that risk of like hitting the 33, 34 point ratios. Risk would heavily increase once you start doing what? Like you see this from open to close, it's 32 points, 33 points. So something that I've noticed that they're doing, if you pay attention here, you see how this is around 32, 33 points? Not quite high enough. From here to lows, if they did something similar, they would close us right in here. Okay, this would be a pinnable spot. And it's basically right where they open the market. Does that make sense, you guys? Rewatch this if you need to. This would make sense that that's a pinnable spot. Because that's off a high to low to open close ratio. And you normally need to break at least 33, 34 points per market to be more constructive. So that actually makes sense. That would be a perfect spot to basically doji this, is somewhere in between here. And where did they open the session today? Where did they open the real-time session today? Do you see that? You think that was a coincidence that they opened at 71, 63, 25? No, probably not, okay? Because they're kind of keeping you within this range. Risk obviously heavily increases if, let's say, you pushed beneath that. That's where you could start getting those 71.14. Okay. To 70.99, basically back to that neutral zone. Does this make sense? Okay, in terms of like a risk increase. That would be a 33, 34 point break basically off these lows or open close. Off where they actually opened, at that point then, you know, there's some odds that maybe they come back, and if this is an inside range scenario, it would be them basically not taking out 3.1, 3.6 and holding maybe closer to like 3.6, 3.7, 3.8, 40. But then that also makes it so that they don't really break 7.2, 7.3. Okay, that would be an inside day scenario for tomorrow. So we're pretty much open up for a few different odds. A lot of this is going to depend on what they do tonight, because again, they still have this little room here, and again, they could still try to break it back up. That would be an engulfing. Okay, this already doesn't look like they're going to close green, which is actually good. We don't really, at this point, it's pointless closing green unless it's going to just keep going. Okay, so this kind of just leaves this area still in play for the week, but I think as long as they can keep it around this area here, like at least 5.8 to 6.3, then it probably should be okay. The worst case would be, I think, closing beneath 4.446 or something. But staying in the means, it just keeps that volatility and two-directional price action in play. So I feel like they'll probably pin it flat, so we'll see. Okay, I did transcribe this, so I'll get it put into some notes, and then I'll share those maybe a little bit later. No report today, since you guys requested one yesterday instead. I think we're pretty prepared for what scenarios and ranges we had going into today anyway. And we still are well aware that this was our downside support for the week, which has not yet triggered. So we're still kind of, we're basically just stuck. Okay. All right. I will see you guys tomorrow. I'll post those conditions